Hi there, this is Rob from Eminisniper. I just wanted to cut a quick video kind of discussing our channel band indicator. So that's going to be this indicator that you see on screen. It's kind of got this outside bands. We call those our reversal bands. And then we have this kind of inside channel area. And the way that we use this is we basically know the limitations of the market, how far away it can get from our center channel. And just about every time they test these areas, what they're going to want to do is fool some breakout traders. And so that's a real common thing. It's one of the market's favorite things to do. And so since we know that this is where the market wants to reverse from, that when they test these areas, a lot of times they'll put in either a slightly lower low or a slightly higher high. And that way the people that were taught that you just sit at a basic swing and look for a continuation move, well, we know that's not what the market wants to do at these places. And so it's very important that we realize that and where they want to head. Now each of these moves back to our bands, so we're not going to expect a move through the actual channel but just back to the band. When these moves take place, they're all 80 ticks, so they may go beyond that, but 80 ticks is about anywhere from our band. They may print a little bit higher than that, and so that would make it more in the 90 tick range or whatever the case is. But they're very big moves, and you certainly can't get 90 ticks to the upside doing a breakout trade or to the short side looking for any kind of continuation. So we have our general targeter that tells us that if we happen to be short in a move like this, targeter is going to tell us, well, hey, this move is over. And the other very good thing about having that is when we have this move on targeter, so our green crosses above our dotted magenta, when it crosses again, whether it's a few candles later or in this case from one side to the other, we're talking about a move of about 200 ticks. So this move here goes from one side of our channel to the other, and targeter keeps up with the move the whole way. So that's very interesting. It's not easy to hold on to a 200 tick move, but again, targeter can be very beneficial for that. So in an area like this, we know that we've got sideways activity. Not a lot is going on, but there's certainly trades to be had on a smaller time frame chart, and same thing here. So if you like the reversals off of those bands, they're not plentiful throughout the day, but often we'll see one, maybe two of those moves a day. On the 4 tick chart, so our medium time frame chart, we'll see the same reversal bands come into play. And these moves are more in the range of about 30 ticks. So as we approach these reversal bands, number one thing that we want to know is that we don't go long at a reversal band. We want to look for trades back to our center channel, and they may go sideways for a bit before dropping back into what we expect, which is that channel area on either side of our moving average. And we may not quite get to that reversal band. It may be a little bit higher, and the market's just not quite willing to go to that extent. But it's certainly areas that we want to be aware of, and certainly getting trades back to the center channel is what we're looking for. We don't want to look for continuation trades on overstretched markets. Now we still have, of course, our sniper signals. This is just a little 2 tick on the Russell, and our sniper signals, they're always going to look for longs above that moving average and shorts below it. So the longs, in this case, we can see that we've got these little trail dots, so you can manually adjust your stop if that's what you'd like. But as you approach that overhead resistance area, you know that's where price often stalls out at. So this is a strong trend. We're retracing back to the 2, putting in fresh highs off of those moves. And then here's where the trend starts to fail. We don't put in a fresh high, we suddenly are putting in a lower low, and it's basically just a support test at that moving average area. And of course, on our other time frame charts, we can see if we're approaching a reversal point when we don't expect those longs to work out anymore. Okay, this is a look at yesterday's Russell. Yesterday's Russell started out overstretched to the short side early around the UK market open. So on our higher time frame, they were at a reversal band, and they took that opportunity to go right back to our center channel. Now we had this stretch to the upside, so we had a move from about 1106 to 1121, about that 150 tick range. Hit some downside divergence, so this is one of our indicators called Diver Scout. So that sent price back into this channel. Now that was actually up here, so we had actually on our medium time frame, we'd actually stretched above our reversal band. Did trigger downside divergence and send us back to our channel. So most moves on our higher time frame, we're going to expect them to get back to our channel on our medium time frame, and so they kind of stalled out here. So our next push to the reversal band, that was the U.S. market open until about 10. That triggered this downside divergence, and that was this downside divergence also. So this is this move back to our center channel. And again, these moves are about 30 ticks. This move here, just to get back to the channel, that's our 80 tick move. So then we stair stepped. We had our next push to the upside, so that's at 10:05. And so that was this move here, again triggering downside divergence. Sent price back to our channel, and then we started stretching until we got back to our reversal band on the higher time frame, and the price stalled out there and shied away from it. And that again is putting in a higher high by about a tick from the previous candle, and again tricking breakout traders on an overstretched market, which is something we're always leery about. All right, that's all I wanted to get everybody caught up on, was just a few new indicators that we had introduced, and how we use them, and how we kind of jostle between a couple different time frame charts to just get a feel for where the market's going, where it's going to react back to, and how we want to use those in conjunction with each other to make some sense out of the market moves that we see every day. If you have any questions, please shoot me an email at info@Eminisniper, and I'll see you at the next video.